Hey traders, welcome to Elliott Wave Cafe and another episode of Bitcoin and Ethereum technical analysis here with your guest, the Cowboy. And let's start by taking a look at Bitcoin first, and then we'll move on to Ethereum. So last time we've talked, it was a couple of weeks ago. I think it was on a Saturday, and it was around November 13, and it's exactly kind of where this red line is. So since then, Bitcoin was at about 15,500, 15,006 or thereabouts, and we were looking at some targets around 17,000 zone, and those got surpassed, and we've moved all the way up here to about 19,500 before Bitcoin decided to take a little bit of a breather and just kind of pulled back. So nice continuation of this trend. Under this count, we have this move here as a third of a third. So you have your wave 1 and wave 2, then a secondary 1 and 2 of a lower degree, and then obviously your smaller 1, 2 in here, followed by the meat of the move, what we call here the third of a third of a third, where Bitcoin kind of rise from 10,000 all the way almost to 20. So almost doubled in price. Since a couple of days ago, I think it was right the day before Thanksgiving here in the U.S., Bitcoin, it was pretty overbought by a few metrics, and it just kind of sold off, and we did a sell-off from 19.5, all the way here to about 16.5, so about $3,000 drop. And we have been recovering since then, and there's a couple of ways to kind of look at this, and one of them, it's that this is a possible fourth wave decline, and we're still in the middle of finishing off this minor wave 3. So if we have a wave 1 of these lows followed by a second, up into this rise, there is nothing here in terms of a corrective pattern that matches the second wave. So what I'm trying to allow the market here to do, if we will cooperate, it will be a fourth wave corrective pattern, being a triangle, a flat, or a zigzag, followed by another rise up here in a fifth wave, maybe towards 21 to 22,000. We will take the all-time highs. I think there's going to be a pretty high level of excitement what that happens, and that's going to be, very characteristic for a fifth wave. And the markets will obviously punish a little bit that breakout and any excitement that's going to be if that happens, and then we're going to kind of pull back here in the fourth wave again, maybe back towards 16,000, back to this fourth wave of a lesser degree, if this fourth wave ends up finishing up into these levels. And then you're going to get another fifth wave up here to complete this larger intermediate third wave. So that would obviously, lead to another fourth wave, followed by a fifth, and so on and so forth. So this is kind of what I'm watching here under this red count interpretation. And we did take a long position in here, and I'll quickly show you that into the room. And by the way, guys, we have opened. I'll come back to this, but I'll show you. I have opened a new channel yesterday, and this channel I'm still testing a little bit. It's part of our kind of membership right now, so all our members have access to this. But it's going to be a separate channel where I'm only going to provide kind of trade alerts. And you can see here, we've opened a trade. This was on the 27th. We entered at about 16,560 with stops below 16. 3-hour stops was about 16,250. And then, a few hours later, I moved the stops, and then I continued to kind of, decrease the risk into the trade. As you can see here, we moved them to 1650. This was a break-even trade now. We locked in at about 300, and just a few minutes ago, before I started recording this video, I moved the stops again and locked in at about 500 points into this trade. And we're looking for somewhere around 18,000 to 18,100, if possible, into this trade. If the market kind of turns back and we're going to get stopped out, that's totally fine. We already kind of locked this in. And I have also a charts that I obviously present into our regular channel in here, like what are the reasons that I take the trade, and what I'm watching, and all that, and that I present. That won't be part of a channel. The channel will be just a simple trade alert. But you know, for more information, you would have to be part of the Elliott Wave Cafe regular channel, where I present videos and all the other stuff. Also, by the way, I will take just a quick break in here. I wanted to, guys, tell you I have another couple of days here into our discount. I'm only providing a 50% discount for a 1-month membership. So if you guys want to take advantage of that, there's going to be a link below this video. So let me go back to the video here and just kind of talk a little bit more about this. So under the red count, this is kind of the pattern that we're watching, and we're targeting, at least into our kind of long trade, we're targeting a little bit, you know, higher here towards about 18K. And the reason that is because this fourth wave might not be obviously complete just yet, and that would be just an initial retracement of this fourth, and this could be just a simple leg B of a larger zigzag coming down. We could unfold as a wave B triangle. There might be a flat in here. So there's got to be, you know, there are several ways that this fourth wave could kind of unfold, but we're trying to take advantage of one of these moves first, and then we'll decide what to do later depending on how the pattern kind of develops. So going from my red count, I'm going to take you to our green one, where we're allowing for this possibility of a wave 1 completion up into this highs. Now, you know, this count, it's fine. It's not my favorite interpretation. I'm not really favoring this fifth wave you know, rise in here. This seems more as a part of a larger third wave advance than a final fifth, but I'll give it a chance, and we'll take a look and see how we develop. Because if we're selling off from these levels and we're coming off in a 1, 2, 3, 4, and 5, you know, that would be, you know, a pretty strong indication that this is actually a wave 1 top, and we're working some kind of a second wave pullback or something else. But, you know, under the green count, we'll look at it as such, and then we will get a B wave pullback, and then another C wave sell-off, maybe come back here towards 10K. Below, we can embark into the larger third wave advance and past 20, 30, and so on. So I'm keeping an eye on this one. I don't have enough indication of this being, you know, you know, to put on this count a lot of thought just yet. So it's just kind of starting. So I want to see what happens here once we're pulling back. If we're pulling back in a second wave, as part of a, you know, just a quick correction, and then we're going to sell off in 3, 4, and 5, then I'm going to get a confirmation that that's an A wave. Then we'll do a B, which, you know, will offer a pretty good short opportunity for a C wave decline. So that's under the green count. And let's take a look at the moving averages as well. You can see how the market is kind of, you know, bouncing back from this 21 day. I watched these ones for trend. I think once you have a trend in market, this 21 is a first line of defense. The market seems to be, you know, kind of consolidating just above it. And, you know, it could be that we're just turning in here and just moving higher. This can be some kind of a flat in a smaller fourth wave, followed by a fifth higher, just like we're watching. And then we're going to pull back, maybe tag this, you know, 55 moving average. But, you know, overall, we're way above this, you know, 200 day. The highest point up here from the 200 day was about 73% in rise, you know, which is pretty nice. It's not, you know, one of those parabolic moves that people talk about when you get above it with about 200%, right? So it's still, I think, just a simple normal rise into a trending market. The candlestick charts, you know, continue to be interesting. We have a couple of more days in this month. And, you know, we did get a little bit of a pullback. What I would like to see into this candlestick analysis, I would like to see this monthly, you know, climb just a little bit higher and just leave me a wick that's not longer than the one that we've had here at the lows when we started this candle. So that would give me a little bit more confidence that we're about to do a breakout. If this candle sells off, if the price kind of comes lower and you're ending up with a longer wick, let's say that you're, you know, closing about halfway through this candle, that will start to concern me that they're possibly going to be maybe a little bit of a larger retracement, and that could coincide with that wave 2 count that I just showed you. So for right now, we're basically reattacking these highs. I think these are going to go sooner or later, you know, either now or after a small correction here in second. These are going to be taken out, and then the next targets I'm looking is 22,000, which is a reverse multiple of this decline in here, and the next one, it's up here at about 40,000, which is a reverse multiple of this decline. This kind of coincides here with the third wave advance in price from a 1-2, and you're looking all the way up here to about 161.8. Multiple of this wave 1 comes in at about the same level, at about 42,000. So I think, that's where kind of Bitcoin is heading here, maybe towards the summer of 2021, and we'll look for, for what happens in this retracement and try to join this trend, in a more aggressive way if the market allows us to it. All right, the other count I have here, it's this pink count, and this is a, this one just looks as this being a second wave, so it's not a 1-2, 1-2, but rather just a simple 1-2, and then we're in the middle of this larger third wave advance, and this is just a simple bullish count in here where you're going a 1-2, you have the 3, you can still extend in this third wave a little bit higher, you got a 4, and then you got a 5th, and you got to get much higher. I mean, this is, it's not, I like better the red count because I think it allows for this third waves, for third of a third to look a little bit better. In here, I would reach equality with this wave 1 at about 31,000, and it will look kind of awkward for the second wave to be. But because then if you look at the next kind of standard target, it will be much higher here for a, you'll be up here in about 63,000, where you would get a normal 161 fib for a larger third wave. So that's pretty much, guys, what I have in Bitcoin for right now. The other one that I wanted to show you, and you can see my latest video, I think it was titled like, something that the bulls don't want to really see. And I think it was this up here, where I was actually looking at this. It doesn't matter. They're both the same, my silver and my white. But, this is looking at this whole thing as being a possible flat where you have a 3, 3, 5, or you can have a running flat where, this move up here, gets over this 20,000, creates a B wave up here. You got a 3 wave up into new highs, and then you're gonna do either a running flat or you can do an expanded flat if you come lower, whatever. But it's just something that I'm watching. I'm not gonna spend a lot of time in it until you're starting to get a decline, and you need to get a little bit back here below 10,000, maybe even below 8,800 to kind of give this one more importance. So let's take a look also at Ethereum. So Ethereum, I have a couple of scenarios in here as well, and this one kind of mimics my green count in Bitcoin, which says that we're actually hit a wave 1 top, and I was watching this. For this 5th wave not to pass this 752 level, because if that would have happened, this 5th wave would have been longer than this wave 3rd, and I would have had an incorrect count. So, you got to stay per the rules. You got to stay wave 3. It doesn't have to be the longest wave in the sequence, but it can never be the shortest. So right now, wave 5 is short and wave 3 it's longer. So this allows for this to kind of develop. And this is just an initial decline of the high. So if the market wants to pull back here in a second wave, that would be just a simple, ABC in here, or maybe a flat. But it would take some time, and, you would need to have some kind of a proportionate move, and you would look maybe into the summer of next year before the second wave gets finished. Now there is a count here that calls for this being just a simple flat. So you can have just a simple running flat. That's the top of the wave 1 in there. That's an A. You go up here in B. And although it's quite impulsive, I'm not too happy with the subdivisions in here, but I guess you could make a simple A, small b, and then up in C for a B wave, and then you're pulling back, and it's just going to be just a simple C wave. So remember, in flats, usually you're targeting about 100% in wave C with wave A. So wave A was kind of small, so if market would come maybe back here to about 450 or 400 before the C wave is complete, and then you do a running flat, and then you push much higher here, this would show you actually that the market is very strong. So you would get a simple running flat in here, push up here in this third wave, third of a third, and then you get up here in this to complete this intermediate third, and so on and so forth. So that's just kind of something that I'm watching in Ethereum as well. So kind of looking at this, right, you could move this wave 1 top back in here and then get a flat. The other count is similarly to my pink count in Bitcoin, it's that this is actually a wave 1 top. So we're placing it in pretty much the same level. You finish a wave 2 in here with a failed C wave. That's a leading diagonal in a wave 1 followed by a 2, and we're doing a 1, 2, 3 deep pullback in 4. Still got to do a 5th in here for to complete a larger third, minute 4 and 5, and then you keep going. So overall, I think Ethereum, it's in a good place. I think it's let me just kind of talk about this too. So this was one of the counts I presented in the last video, where we were watching to see if this reaction from these levels, especially with the retest of this, is going to hold this kind of a channel, and this equality and this corrective move is going to pan out, and you're going to actually sell over in the C wave. And with the break above these levels, I think this count is starting to kind of take a back burner. You can start to modify this a little bit and still allow it to happen, but what you would have to do is you have to take this B wave, move it up higher there, and then this becomes your wave A, up into this highs. This becomes your B in here, like that, right? This is just a simple B wave, and now we're doing some kind of a C wave, and you continue to move higher. So you have 3 waves down in A, so you get a flat ABC for A, and then you can get a WXY for a wave B, and but it would still call for this to get a little bit higher, because for a flat, remember, you got to get at about 90% correction of this whole decline, and we're nowhere near that at this point, right? We got to get a little bit higher here, maybe towards up into this 950 level, before you can consider this as a possible flat. So I think even in this case, Ethereum asks for a little bit higher before you can say possible an ABC, and then you can kind of reverse. So that's on that. But overall, I remain bullish in this market. I think I think the markets are have a nice bullish interest in here. You completed some large corrections back in March, and the adoption is serious. And looking at the markets, with the bullish eye, while keeping in mind the risk, I think kind of helps you stay positioned on the right side. So continue to watch moving averages, continue to watch some of these counts, and know exactly where your levels are. So hey, listen, if you guys like this video, please hit the thumbs up button, subscribe to the channel. The link to my room and to my to my trading channel and to my alerts channel, they're below this video. So give us a try. Like I said, there's a couple of days here for you to get a 0.5% off, 50% off of 1 month, and you can check us out. And we do videos every day. We check several markets, and I thank you for watching this and staying with this channel, and please share it. Tell people about it so they can learn Elliott wave and open up a little bit the mind about what it means to kind of look at the markets through the eyes of the wave principle. So again, thank you guys for watching, and I'll see you on the next one. Bye bye.